Are stocks set to sink like a stone? Should you be buying companies doing capital raisings? And finally, do you think petrol prices are going to collapse like oil prices? I'm Peter Switzer.
I'm Paul Rickard.
And
we're mad about money.
All right, Paul, oil prices are collapsed. Explain why and tell us if petrol prices are going to come right down.
Look, oil prices is relatively straightforward, Peter. There's just too much supply and limited storage. So what you've got of the problem in the US at the moment is that the storage facilities are at Cushing, getting close to full. You just can't suddenly store oil. You need stuff underground and you've got to be defence proof and all the rest of it. There's too much production. People have overbought.
People aren't driving anymore.
People aren't driving, and of course they don't want to take delivery. So it's in a futures market, you either get rid of the contract or not. What we saw yesterday was that the May contract went to expiry. Suddenly there was people who were left with long positions. That means they had to take physical delivery of the oil.
And they never know what to
They had nowhere to store it, so they just wanted to get out. So they were prepared to pay other people to take over their contract, so they had to store it. So
and that's why the price went into minus territory.
That's why the price went into minus territory. It also flowed through into the June contract, which is the current spot contract. Finished last night at about $13 a barrel. So that shows you lots of supply, limited demand, and until people get back to work, we get airlines back to work, we get manufacturing moving again, oil's going to be under pressure.
Does it mean there's a buying opportunity, Paul, or is it too scary because you just don't know what's going to go on?
I think there's more damage to come, Peter, because I think it's going to take longer. And that's one of the reasons I haven't been so keen about Australia's oil producers.
And some people bought ETFs, Paul, that were derivatives. They weren't actually the oil companies. They're kind of stuff that you lose a lot of money on.
Yeah, and the US, I think they've got a major oil ETF that almost crashed, so that the same sort of problem. But let's bring it back to the Australian market, Peter. For our energy producers, they're not so much oil companies, but the derivatives of what they produce, things like LNG. Ultimately, the pricing of an LNG contract does flow back or is related to the oil price. And so there's going to be some challenges there. So I don't think they're yet in buy territory.
But the petrol price will fall.
Petrol price will go lower. Look, there's a limit to what it do because there's a refinery cost, there's a transportation cost, there's government taxes, and there's a market and there's a retailer's margin. But look, we could get down to the low 80s or even in the mid 70s, right? Currently, I think in parts of Sydney and Melbourne, you can get oil at the moment for about petrol for about 85 cents a litre. Probably a bit lower to come.
Okay, talk about these companies doing capital raisings, where people who are holding this share, they've lost out, but will people who buy in now be buying into a really good investment opportunity? Yeah,
well, one of the big lessons of the GFC, Peter, was that there were a lot of capital raisings and generally they were great times for investors to take part. The reason is because mainly companies get forced into doing a capital raising by the market. They're usually done at a discount to the current market price because they've got to get the buyers in to provide the capital. So that means that the pricing can be pretty attractive. Often they get sold off ahead of the raising as well because the market's pretty smart at doing this. It knows how to spot a company. I won't say they're vultures, but by the way, where there's money involved, people will do what's in their own interest. And that's exactly what happens in the equity market. So most of these capital raisings are pretty attractive buying opportunities. The problem is that for retail investors, they often get quite badly screwed and get diluted because to get the money quickly, the companies go straight to the institutional investors, and then sometimes all retail investors get a share purchase plans, which are nice, but essentially you don't get your fair share. Cochlear is a great example of that. $880 million from institutional investors, $50 million just from the retail market. Retail investors got badly beaten over there. Cochlear share purchase plan closes tomorrow, $140 a share. Cochlear's trading about $180 at the moment. An absolute no-brainer to invest if you own Cochlear shares.
Okay. All right, Paul, let's go and talk about the big issue, namely, we've already talked about oil, haven't we?
We're talking about where the market's heading, Peter. I think is probably the bigger issue.
We obviously jumped over one.
You did. You started in the wrong order. You got the countdown right. Done a few other things this morning. But anyhow, let's move on. Right?
Do we drop like a stone?
Yeah. Well, look, I think I have said this for a while, Peter. I thought it was going to work around 5,000 on the Aussie market. Got up to almost 5.5. I'm not surprised that we're coming back a bit. The US always felt to me went from a bear market a bull market to a bear market, straight to a bull market again. I thought that was all a bit quick.
Yeah.
I lost track of that, so not surprising. I think we still don't know how long and how slow this recovery is going to be. That's going to create some nerves. I think you're seeing that in the oil market, and in the end, and if anything, part of the big reason down, if you recall up front, was actually the oil market. It was when the Saudis and the Russians really started to decide not to play ball. That's what caused the big leg down. I think we're seeing again the same thing here. So I reckon a little more pressure in the short term in our market. There's a bit of nerves out there, lots of raising, lots of chances for people to invest. I think you still can afford to be a bit patient in this market.
Yeah, I think the fact that we're on top of infections and deaths progressively around the world, that's good for the stock markets. Partly explains why the American market rebounded. They're only down 15% from their all-time highs at once, and the Nasdaq was ahead of its all-time highs, which is crazy. But I think we're going to have another leg down, Paul. I don't think it'll be as big as the first one, because the first one had no support, no stimulus packages, no central bank support. But I do think it'll be going down again, and I guess there'll be a buying opportunity, I think, for people.
Yeah, I think in the next couple of weeks you're going to get some opportunities to buy. You can afford to be a little bit patient. I think 5,000 is about the mark for our market, and maybe 20,000 back to the Dow. They're just numbers and they're big figures, but markets tend to like big figures. So that's why I'm saying that point.
And I like buying opportunities. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.